Hello and welcome to the Friday market update. So, uncertainty is a killer, and there is a lot of uncertainty out there right now. So many things going on with elections, inflation, jobs. They don't know where everything is at. But mortgage rates remained above 6.5%, will likely hang out here until at least after the election. So, right now, the markets are dissecting every single piece of financial news from jobs reports, inflation reports, JOLTS reports, and they're looking at it with a fine-tooth comb or a microscope. So it's about two things primarily, jobs and inflation. And at this point, it's a report by report cycle with every single report taking on more significance than it probably should. We don't know what the next report's going to say, so we better be careful and not err on the wrong side. So this week was inflation week. Inflation came out a little bit higher than expected, but not all that bad. I know that we've gone up tremendously over the last 3 years, but in terms of where it's at currently, it's still not that bad. At least it didn't derail us. So many of the political ads running right now before the November election are asking, are you better off today than 4 years ago? And the big economic focus of those ads is inflation. So it's front and center in the media. And Wall Street never wants to be swayed by that, but they also don't want to be behind the curve, so they err on the high side. And Wall Street is also not immune to the media, as they're all individuals and they see the ads every single day. So because inflation is front and center, it's definitely having a lot of focus on what's going on in the marketplace. The reality is the economy is not overheated and inflation is not completely out of control like it used to be. It's under control at this moment, and it appears that it will be going down. So it's just a matter of convincing Wall Street traders that we're okay. And it's all about the Fed and what they do. And so they're listening to them very closely. This may take months before they feel comfortable with lower rates. Every economic report will be dissected and analyzed and reanalyzed, and they're going to listen to everything the Fed has to say. So until they feel really comfortable, I don't think we're going to see a super big change in the rates. So the only thing that would bring rates down fast, in my opinion, would be a significant problem that is unknown about the economy in a bad way. In other words, is the economy in recession? And if we do go into a recession, we would see rates drop pretty quickly. Otherwise, the decline in rates will be choppy and certainly not in a straight line that we would all like to see. It just doesn't happen that way. Oh, well. On the real estate side, Altos Research, which I love, they do a great job at analyzing the data, reported that when interest rates were starting to approach 6%, it motivated a number of buyers to jump back in. They definitely saw an uptick in that, and they also started seeing values start to go up a little bit. Now that they have bumped back up over 6.5%, the buyer activity is now slowing down again. So that 6% rate may be that tipping point to a more active real estate market. I firmly believe that we're going to get to that 6% and possibly lower by the second quarter of 2025. We will first have to get through the election in less than 30 days. Then we have to get through the Christmas holiday season. And by the time the Christmas season and economic reports are released, it's already going to be in mid-February. Those reports aren't released until February. So we'll also have a new president, and they'll be inducted in mid-January, mid to late January. And then there's more uncertainty. How is this new presidency going to work? So we just don't know. So uncertainty is really the key here. And I think that because of the uncertainty, we're not going to see a big change in interest rates. It's just going to take time before the markets feel comfortable. So the moral of the story that I have discussed many times and many people believe and talk about is that lower rates will bring more buyers into the market and push real estate prices higher. That's what Altos told us this past week. Those buyers willing to jump in now while there is a little spike in rate can probably benefit. They not only benefit from more stable home prices, but many are getting the seller to pay closing costs, and we aren't seeing nearly as many multiple offers. Now, those that wait too long, they may not be able to drive their bus like they want to. They may have to deal with multiple officers. They may have to deal with higher prices. But as always, feel free to reach out to me directly to get your buyers pre-approved and educated so they can make the right decision for them. You can also send them to my calendar link where I will go through a free CIA analysis, credit, income, asset analysis, so they know exactly where they stand now and what they need to do to get into a home. So let's run their numbers. Hope you all have a fantastic weekend, and we'll see you next week on the Friday Market Update. Take care. Bye-bye.